Hank Smith of Haverford, they've got $6 billion in assets. And Hank, you're liking some big financials, among them J.P. Morgan. But I have to ask you, what do you think is at work with this rally right this hour?
Well, I think it's a lot to do with the survey that you just talked about in terms of the thinking that Great Britain's not going to leave the EU. Look, I also believe that the market looks forward and it's looking for a second half in which the earnings picture is better than it's been for the preceding 4 quarters because the dollar's not as strong, oil prices are up, and comparisons are going to be much easier. So all of that combined, and plus we've had a lot of negative sentiment this year, and I think that low volume you talked about, Liz, is reflective of a lot of negative sentiment, a lot of anxiety, and a lot of doubt. That's good for a bull market.
How about, Brian, what do you think about the notion that the bank stocks are up because of a Fed rate hike? I mean, it's somewhat counterintuitive, and I know it is, but I talk to a lot of people at the banks, and they say they would welcome a rate hike, and the reason why is because that spread between what they lend and what they charge actually widens because they don't raise what they charge, what they're paying their depositors, right, but they immediately raise what they charge their people that are borrowing from them.
Yes, I agree with you, and I agree with what you said a little bit earlier that I don't think we're going to get a rate hike in June in front of the vote on leaving the EU.
Okay.
I think we're going to get it in July and then July. One in December.
Okay, interesting. July. Yep. Interesting.
All right, and Hank, looking at what you believe might happen, the names that you say, those are the ones that should be in a portfolio. Can you just throw out some? Because our investor viewers are saying, well, what has he got? What are his best ideas?
Sure. So stick with the highest quality banks. Those are J.P. Morgan and Wells Fargo. Clearly the highest quality banks in the United States, if not in the globe. 3% dividend yields, very modest valuations. And combine it with another blue chip high quality company that's selling 20% off its lows, and that's Disney. We think those are 3 very good picks right in here.
Yeah, they're all moving higher. J.P. Morgan jumping about 2%.
Let me throw 2 gossip items out here. Purely gossip. I know people love gossip. Number 1, you hear a lot of talk coming out of Viacom that Sherry Redstone and now her father, in whatever state he's in, they want Philippe Dumond out of Viacom. The scuttlebutt I hear is that if they had their druthers, they'd have Les Moonves, who runs CBS, run the whole thing. That he is that Sherry Redstone gets along with him very well, and that's one bit of gossip. The other bit of gossip is we're going to be hearing a household name, I think, once this Bayer Monsanto thing gets done, and his name is going to be Michael Kramer, the investment banker. He will be one of the new star bankers of Wall Street if this thing gets done. He's representing Monsanto.
Not to keep ping-ponging back, but this news flow is very quick, guys. If you put up CBS, which Les Moonves has run, CBS has outperformed, one would argue, over the years, what Viacom has done. Les Moonves in a very good position. And in fact, you want to talk scuttlebutt, Fox Business has learned that Les Moonves was seen at Michael's restaurant. By the way, for those of you who don't know, it's where all the media titans go.
But he probably eats there.
But he was at a front table today. I mean, it could be, these guys in New York, they position themselves out there. It's kind of interesting.
As someone who's been to Michael's a few times, I bet you Les Moonves eats there every other day.
Okay, I'm just saying he wasn't hiding. Let's put it that way.
Oh no,
not at all.
Listen,
I mean, he's in a good position. Is our point.
Okay, I misunderstood you. I thought maybe that is a signal that he's about.
Oh, he's in a good position.
Yes, and listen, Sherry Redstone really likes Les Moonves. She really despises Philippe Dumond. She's going to be controlling that company now, it looks like. She's got her father's back.
Well, somebody's got to get control because names like Fox A, which of course is the parent company of us, 21st Century Fox, names like Time Warner have outperformed Viacom over 1 year, 3 year, 5 year, 10 year. It just looks a lot better.
I heard through my sources that Philippe Dumond was eating at Tad's Steakhouse. I heard this through my sources.
Don't be dissing Tad's Steakhouse.
No, I'm just telling you. I heard through my sources. Cavuto loves it.
Well, I'll tell you what we love. We love the bulls today, Charlie, because we're up 219 points. But, folks, high of the session, up 250 at the moment. Lots of green on the screen. I don't know if we can switch around the jib camera for the moment and take a look at the hot chart, what we have here of the Dow. Can you switch that around, maybe? Twirl it around, Dave? Yeah, because I want to get this, our heat map, as we like to call it. Every name but Boeing on the Dow 30 is moving higher right now. Boeing is the only laggard at the moment, but of course it got a big bump yesterday on a 100-jet order for Vietnam.
Did you ever notice that every time the market hits 18,000, it bounces back down? There's something weird here with this trade.
It's called the ceiling, I guess. I mean,
but what is this? I mean, how do you make money on this? We should ask Brian. Brian, how do you make money in this?
It's Hank.
Hank, I'm sorry. How do you make money in this?
Yes.
Sorry.
Well, so far you have to buy on the dips for sure if you have a trading focus. But we're long-term investors, and we continue to favor equities over the alternatives being cash and fixed income, which pay you nothing to very little. And the play in equities is really a yield play. You can get better yields in equities than you can in fixed income, and that is an opportunity that's been with us for this entire bull market.
So you're looking for dividend stocks, essentially?
Absolutely.
Okay.
Well, if we look at the Treasury picture, let me just show you, because the 10-year yield right now, 1.86, and I bet you could find a host of stocks out there that look good, that have great yields. I mean, Abbott Labs is one of them that people always tend to look at, a lot of the pharmaceutical names, but you've got yields that are certainly considerably higher than that.
Over 50% of the S&P 500 companies have dividend yields greater than the 10-year Treasury. That is remarkable, given that we're in the 8th year of a bull market.
How about that great yield on Twitter?
Okay. Speaking of Twitter, we should mention.
I just had to throw that out there.
Twitter hit a record low as soon as the market opened, even as it had good news that would arguably please the people who use Twitter, like Charlie and myself.
How come it's not higher?
Here's the intraday. It plummeted. You can see that tiny red dot at the far left part of the chart. It tried to climb higher. It is still a $14 stock. The high of the year, and by the way, it's been a tough year for Twitter. Let me just quickly look. High of the year for Twitter was $38, but this stock a year or two ago was $60 to $70.
All those people that troll me have no money because they don't buy
They don't buy the stocks.
They don't buy stocks. They don't buy advertising. I'm trolled by
I think they're waiting for Pied Piper to go public. Okay, we have some Silicon Valley fans here.
I think they bought Pets.com a long time ago.
Hank, give us in 20 seconds your best idea right now as we go into the second half. We got 20 seconds.
Well, look, I think you stay in a diversified portfolios balanced with defense, consumer staples, and healthcare, and some offense, industrial, basic material, financials, the banks. But you have to have this balance. We're in a slow growth, low yield economy. And that's going to continue for several years to come.
Great to have all of you. Thank you so much.